So, interest rates are always a hot real estate topic. I know there are lots of buyers out there who have been waiting for rates to go down, but what if I told you there's a way to get a lower rate for the first 2 years of your mortgage right now? It's called a 2-1 buydown, and it's helping a lot of buyers out there right now. Today, I've invited Jennifer Rome, a local mortgage expert with FlatBranch Home Loans, to help us break down exactly how a 2-1 buydown works and who it might be right for. So Jennifer, let's start with the basics. What exactly is a 2-1 buydown?
So a 2-1 buydown is a temporary payment reduction program where the payment is reduced for the first 2 years of the program or of the mortgage. The first 2 years the first year it's reduced by 2% against the fixed rate on the home loan, and then by 1% the second year. It is a fixed rate mortgage, so the interest rate doesn't change. It's just a way of helping the home buyer ease into their payment that first 2 years.
Well, in which we know that the first 2 years of owning a home, you kind of have some extra expenses there, so I can see how this could really help out some buyers. Can you explain just how it lowers the interest rate?
So really, honestly, the interest rate is not changed throughout the course of the loan. The interest rate stays the same. However, there is a reduction in how the payment is calculated the first year because there is a seller contribution to that payment the first 2 years. So the way it works is we ask the builders or the sellers to cover the cost of the program. Those funds go into what's called an escrow account held at the mortgage company for the buyer, and the buyer is making a payment based on a reduced interest rate that first year and the second year, but that payment is made whole by those funds from the seller or the builder.
Okay, so you said that money is put into an escrow account. Like, where does this money come from? And does the seller pay the builder? I know you mentioned them. Does the buyer participate at all in this? Or
Great question. So this is a program that typically is funded by the seller or the builder. The buyer would not contribute to the program. So that is actually a benefit to the buyer, that they're getting this great reduction in payment for the first 2 years, and they're not incurring the costs. The seller or the builder is incurring the costs.
Yeah, that would be a great benefit to the buyer. I can see that. So how is this 2-1 rate buydown different than a permanent rate buydown?
Great question. So the 2-1 buydown is really, again, it's not a reduction in the interest rate, it is a reduction in the payment for the first 2 years, where a permanent buydown is actually a permanent reduction in the interest rate. However, the cost of that program is typically incurred by the buyer, and the cost to buy down the rate as much as the 2-1 buydown, the effective rate for the 2-1 buydown the first 2 years, it's nominal. So there's usually a less benefit, more cost to a permanent buydown than there is to the 2-1 buydown.
Oh, okay, well, great. So can you kind of walk us through a real life example of how a buydown works? Maybe use simple numbers so we can get an idea of exactly how much this could potentially save a buyer.
Yeah, absolutely. So let's say we have a home that with a purchase price of $400,000, the buyers are putting down 10%, and we are set up with a 30-year fixed rate mortgage with a 6% interest rate. So that first year, the buyers would be making a payment based off an effective rate of 4%. So first 12 payments, 4%. Second set of payments, so payments 13 through 24, would be made with an effective interest rate of 5%. Again, the interest rate doesn't change throughout the mortgage, so the payment is still made whole with the lender. However, that difference in payment is made from the escrow account that was set up when the sellers or the builders contributed to the cost of the program.
Okay. So
and then-
potentially, how much could you save?
Yeah, so let's walk through the payment scenarios. So the first year with the effective rate at 4% and the $400,000 purchase price scenario would carry a payment, principal and interest only, so not taxes or insurance or mortgage insurance, but the principal and interest. That first year would be $1,719. Year 2, it would increase to $1,995, and then year 3 and beyond, if they're in the same mortgage, would be $2,158. So that first 2 years, when you look at the difference in payment, that's a savings of $439 a month. So pretty significant.
That is really significant in anybody's budget. I don't care who you are.
Yes.
So Jennifer, who would be the ideal buyer for this program? Is it first-time buyers, move-up buyers, maybe people who plan to refinance later? Who does this work for?
Those are actually all great scenarios. So definitely our first-time home buyers, move-up buyers is another great group. Anyone who thinks they're going to refinance, anyone who may not be staying in their home for a long period of time. Any of those scenarios are perfect.
Well, so pretty much anyone.
Yes, absolutely.
So I've also seen sellers or builders offer 2-1 buydowns as an incentive to attract buyers. How does that typically work?
So this is a creative way for sellers to maintain that price that they're hoping to get on their home, while also incentivizing buyers to come to the table to purchase their home. And they do that again by incentivizing the buyers with this payment reduction the first 2 years of the program.
So if I'm the listing agent for seller and I'm having trouble getting people through the door, this might be a great incentive to offer to them just to get more people through so that we can get the home sold.
Absolutely. It ends up being a win-win for both the seller, the builder, and the home buyer.
So suppose I am representing a buyer and the seller is not offering a 2-1 buy down. Is that something as a buyer's agent that I could actually write in as a concession in the contract and we could ask for the seller to provide a 2-1 buy down?
Yes, absolutely. In fact, that is something that I often strategize with my clients and my realtors on a regular basis. So it is something that you absolutely can build into the contract.
So if I'm working with a buyer that maybe the home they're looking at is at the top of their payment ceiling, this might be a great way to get them into that home.
Absolutely, yes. It helps ease them into the payment over the first couple of years. Perhaps their income is a little bit higher, 2 years down the road, making those payments easier. Hopefully there's an opportunity to refinance as well.
Okay, and if I'm a seller, why would I want to offer 2-1 buy downs? Say, why don't I just reduce the price by $5,000, $10,000?
Well, I think there's often incentive to maintain home prices, probably for many, many reasons. And so if there's a way that they can still net the same amount of money for their home, so reducing the price, they're going to net a certain amount, offering a seller concession, they may be able to still net the same amount. And so if they can still net the same amount but get the buyer into a better situation, I mean, that's a win-win for both parties.
Absolutely. So what are maybe some common misconceptions that people might have about 2-1 buy downs?
So it's often thought to be an adjustable rate mortgage. It is not an adjustable rate. Your rate is fixed throughout the term of the loan. So that's probably the most common. Another misconception is that it's complicated, but honestly, I think just taking the time with the client and with their realtor, walking through the scenarios and offering a full breakdown and support with how it might be structured in the offer. I think once we go through those steps, then it's no longer complicated.
Well, you make it sound really simple, so that's very helpful for our viewers out there. So after the 2-year period, does the rate automatically then go back to the original rate?
Great question. So the rate actually stays the same throughout the duration of the loan. So unlike an adjustable rate where rates will change, this never changes. The only thing that basically happens after that first 2 years is that bucket of money that the seller or the builder contributed to help offset some of the payment that first 2 years, that's gone. That's where the homeowner would then be responsible for the full payment from year 3 on, unless they refinance or move.
So the rate never changed, it was just your payment amount?
Absolutely.
So what happens if, say, the owners have to move before the 2-year period is up, or maybe there's great rates and they want to refinance? What happens to that money that's in that escrow account?
I love this question because it is what I think to be one of the hidden gems with this program. So that money that the seller or the builders contributed towards this program, it goes into an escrow account that is held with the loan servicer for the homeowner. And so in the event that homeowner sells their home or they refinance before that 2-year mark, any funds left over in that escrow account go back to the homeowner. So
back to the homeowner?
Back to the homeowner.
Oh my gosh.
So they can use it to cover the cost of a refinance, or maybe they're going to use it towards closing costs on a new home. But
So
the money's theirs.
Really, there's no downside then. It's kind of a no risk loan.
Right. The only scenario where perhaps it wouldn't be the right fit is if it's somebody that's going to be in their home for a very long time, and there's really, maybe they're already in a really low rate, and the opportunity to refinance to a lower rate really is probably not likely. That would be the only scenario this wouldn't make sense for.
Okay. So right here in Kansas City, in our market, are you seeing this program, the 2-1 buydowns, are you seeing it utilized a lot? And do you expect to see those trends continue as we move into 2026?
Yes, absolutely. This is a program that I am seeing being utilized more and more every month, and I do anticipate we'll continue to see that trend heading into 2026.
So does the 2-1 buydown work for all different kinds of loans, like FHA, VA, conventional, or do you have to have a specific type of loan?
Great question. So this actually works for all 3 loan programs you mentioned, so conventional, FHA, and VA loans. The rules are slightly different between all 3 programs, but nonetheless it is an incentive available for all 3 types of loans.
Okay, so if you have a specific type of loan, you just want to talk to your lender, hopefully it's Jennifer, and she'll take you through the specifics of what those differences are. Well, Jennifer, this has been really just such great information. If someone watching wants to learn more or find out about if a 2-1 buydown might make sense for them, how can they reach you?
You can find me on Facebook at Jennifer Rome McCardle, or at my website at loansbyjennifer.com.
And we'll put all of the information here up on the screen so you can easily reach her. And of course, if you're thinking about buying or selling a home here in the Kansas City area, Jennifer and I would love to help you navigate the process. And if you want to learn more about Johnson County suburbs, request my free Johnson County relocation guide. Just comment "guide" below and I'll send it straight to your inbox. Whether you're planning to move soon, like in the next 9 days, or in the future, like in 90 days, we would love to help you find your perfect home in your perfect neighborhood at your perfect price point. Just give Jennifer or I a call, or shoot us a text, or send an email, or you can just scan the QR code to schedule a quick Zoom chat. Let's talk about your goals. Thanks again to Jennifer Rome with FlatBranch Home Loans for giving us such valuable information today. And thanks for watching Living in Kansas City. I'm Cheryl McCormick with the #1 ranked Rob Ellerman team at Reese Nichols Real Estate right here in Kansas City. Hit like if you found this helpful and subscribe so that you never miss a Kansas City update. So I'll see you next time, and until then, stay safe, stay curious, and stay tuned for more exciting tours and real estate insights about Kansas City to come.